Hey, good afternoon, everybody. This is Louis Johnson, the CIO from Capital Wealth Advisors, here today to go through our latest installment of our 3 and 3, where we try to talk about 3 things that we think are important in the market and we're watching. Do it 3 minutes or less. So here we go. So the first thing I'd like to talk about is on my screen here in terms of my Bloomberg, and the big picture here is commodity prices, in particular natural gas prices. In this case, in Europe. The point we're trying to make is that the market is, in fact, suggesting that prices are going to be higher for longer. And here we use Bloomberg's commodity curve indicator to kind of walk you through that. So let's talk about it. So basically, there's 2 different dates here. And again, this is the price of natural gas in the Netherlands. This is one of the important European price indices. And there's 2 lines on the screen, and they go for different dates. So basically, it shows what the commodity prices at this date has their forecast for different periods of time in history in terms of where we are right now for all those different periods versus where we were the day before the Russians rolled into Ukraine. The orange is the most recent price. You can see this is very, very high, much higher than the prices that prevailed the day before they invaded Ukraine. So our first kind of takeaway here is that the market is saying European natural gas prices, number one, they're up a lot. Particularly beginning with the invasion, but it's not just the spot price. This is current. This is, let's say, mid 2022, say where we are right now, with prices now at $52 an MMBTU versus to before the Russians ruled in Ukraine, $29 an MMBTU. So, double basically the price. But that's not the point I'm stressing. The point I'm trying to stress is if you look further on in the curve here, let's say at 2026, 2025, these prices are still highly remunerative for, let's say, U.S. producers, and we'll talk about that in a minute. But the most important thing we want to indicate is that the market is validating in terms of future markets higher for longer. In this case, natural gas prices in the Netherlands. Now that's important because it's not just the Netherlands; it's also Asian. So this is the Asian price index. In this case, this is for liquefied natural gas. This is the Japan-Korea cargo swap. So what we wanted to demonstrate here as well is showing the commodity curves very much the same dynamic. The second thing we want to talk about, which is the market is pricing in kind of higher for longer for a multi-year period. So yes, the prices do decline over time. So for instance, pre-invasion, this price for LNG was $28 in Asia. Now that price is 48, and the price does go down over time. But what we wanted to demonstrate, and over time, I mean, this is prices in 2024, 2025, currently $20 now versus $11 before the invasion. But what is remarkable, again, is that the entire price deck has moved up, in this case, for this Asian price index. And this has other implications, which is the kind of third point I want to make. So this is the coal price in terms of reference Newcastle. So again, the prices that we demonstrate here, prevailing price right now, spot price $438 for September 2022. The pre-invasion, that was $175. So yes, it's remarkable that that whole price deck is essentially doubled, but that's not the most remarkable thing. The most remarkable thing is that the long-term price in this instance, which I suppose begins, let's say, in 2025, that price has gone from the market pricing at $137 a ton to $300 a ton. And this is, frankly, all the way through 2027. That's remarkable. So you talk about, so what the market is saying, in my opinion, is that the nature of the supply shortages, what it's pricing in right now, is in fact kind of a higher for longer scenario. And then the final implication I want to talk about here is that this is a very important development for many different commodity markets. So for instance, here I show this is the spot price of ammonia. In this case, this is delivered in Tampa. This shows the multi-year price trend in that price of ammonia. You can see that it had an incredible price spike. It was already going up pre-invasion, had a huge price spike. It's gone down. The reason I'm highlighting this price is that there's 33.5 MMBTUs of natural gas in every 1 ton of ammonia, and ammonia is the kind of the substrate for many important fertilizers. So agriculture, modern agriculture that has very high yields is very dependent on the intensive use of those fertilizers that are based on that. So, this is a theme we're going to be talking about for quite some time. But, the energy markets have shifted in a tectonic way. This is not our opinion. This is what the market is pricing in every day. And this is going to have very important implications for how we're investing. We think you should think about it as well. And that's our 3 and 3. Thank you. Have a good day.